Greetings, everybody. This is Jeff Scott, and this is May 10th, 2015. It is approximately 4:21, so the future market should not be open, although there's already been some news today where China did some easing, lowered some rates, and I think increased some margin rates. So that could be some stimulus that could affect the market. But as of this point, as I said, the futures are not open. We did have a strong close. The futures went out at 255 points up. The Dow was closed at 267, S&P up 28, and the NASDAQ up 58, all above 1%. The Dow leading up nearly 1.5% on Friday. I entitled this one as Dancing with Mr. Darvis, although it's not necessarily a box. It's more of a wedge. We are bouncing between support and resistance, support and resistance. Right now, advantage bulls as we're bouncing off support, but don't hold your breath because we could hit resistance middle of the day on Monday or Tuesday. That's how close the trading range tops and bottoms are. Disclaimer, this is for educational purposes only. Any recommendations in the spirit of education and not investment advice. I'm a doctor, not a broker. I am truly independent. No one pays me to say good things or bad things about their software. I pay for all the programs that I use, and I'm truly independent. And trading involves risk, and you alone are solely responsible for any decisions that you make. As always, I always like to think of my offerings to help you become your own guru. And these are just some of the influences on my style. I cover this every week, so let me just point out the critical parts. William O'Neill, cancel him, is the basis of my knowledge. Morales and Katcher took cancel him to a new level. Ian Woodward and Ron Brown, in partnership with George Roberts with HGSI, really elevated my use of canceling by automating it and making it online with HGSI long before there were any websites to support that, and I believe it made it better. Elder and his partner Kerry Lavorne, these are some of their books, been important. In my learning, I use Force in a few things, although I do it different than Elder teaches it. And then perhaps the greatest current influence I have, which is John Person. These are a couple of his books. And what he's done is helped me go from finding the stocks that are setting up, which are the best stocks, to figure out when to buy them and how to better manage their trades and capture more of the move and risk less, which is important. Speaking of risk less, Van Tharp is sort of the guru on money management, position sizing. Tom Dorsey, not that I'm going to advocate the use of point and figure charting, but rather more about the idea of comparative relative strength. And then my partner for the education programs and a good friend and a great trader, George Lee. I have a lot of different programs, and but really at the end of the day, I only need several to do my analysis. I use real-time charting platforms, TradeStation, Thinkorswim, or Genesis. And then for analytics, I use HGSI, I use EdgeRater, I do a number of seasonality programs, and a number of websites. Sorry, I stepped away for a second. It was getting noisy here. Entertainment time in the Scott condo. Market thoughts, as I've said the last couple of weeks, if we're in topping pattern, it's a process, not a single day. The market's likely to peak sometime, but it's usually preceded by divergences. They weren't here last week, and they weren't beating me up on Friday, but I look for AD divergences as sort of a leader. Major indices, there are gaps across the board on Friday, reversing what had been a down week. Employment numbers saved the week for the bulls. We're still range bound. We'll look at the major indices. The dollar weakened some. Not that it did much for gold and silver. VIX is at the bottom. What that means is if you're concerned about some of these earnings blow-ups, you have the opportunity to buy cheap protection. And earnings or revenue misses, speaking of blow-ups, have been pummeled. Think LinkedIn, think Twitter, think Groupon, think Monster, and so on and so forth. This week, you need to know your EPS dates. We're starting off at the bottom of the trading ranges, but again, we could get to the top in a matter of hours. Ranges are narrowing, and will we break out or down still remains a question. As I like to point out, Stock patterns are cyclical, and we're sitting, I think, up here in this uncertainty stage in sort of a Darvas box or wedge formation where we're just going up and down between support and resistance. And it remains to be seen on the macro perspective. Do we break out to the upside and take out old highs and do a run prior to the summer where we think, where things slow down? Or are we just going to break out and the sell in May and go away will become the story? Right now, we are at that part of uncertainty. And what does that mean? It means you need to be careful. Remember, cash is a position. Take smaller positions. I'm selling premium to offset some of my my protection costs. And I'm not ready to become bearish, nor am I overly bullish. I'm cautious. I'm probably more heavily weighted to the bulls. I took off some of my protection as the week went on, but I'm still concerned that, as I said, we're in a topping process, and I don't know which way we're going to break. Again, knowing your news is important. Last week, Friday, was all about employment. We got some PPI and we got some claims coming in on the 14th, which is Thursday. Other things that might move: import and export prices, retail sales, mortgage index, industrial production, Empire Manufacturing, and Michigan sentiment, none of which may necessarily be as powerful as the unemployment numbers, but many of them could make a difference. As I put my little quote here, it's a judgment call to hold your stocks over an earnings date. It's bad judgment to not know when your earnings date is scheduled. Here's just a list of some of the things that are occurring this week. I have a number of stocks on this list, and I've been managing my stocks in this list a number of different ways. And one of the things that I like to do is to buy puts to protect my positions, and then selling a deep in the money put and selling a deep out of the money put and a far out of the money call to make up for some of the expense of that put. And once the move happens at earnings, I know there's going to be a volatility crush. All of them are going to lose value, and hopefully my short positions, the call and the put, will offset some of the losses that I'll get with the volatility crush in my long put. And then I'll make a decision what to do with the long put and the stock. I'm going to go over a lot of that at my upcoming meeting. So these are my introductory comments. We'll go do a market review, then our top-down analysis, bottoms-up kicker, and get done. I want to be finished within the next 60 minutes. Just to remind everybody, like you don't already get enough reminding, my meeting and George Lee's meeting is coming up June 27th to 29th. I'm not going to repeat everything here except to reiterate the room is filling quickly. Including George and I, we're at about 23, and Chris White. I can handle probably 25. This includes everybody who has told me checks in the mail. So that means I got a couple of positions open. It'll be a great meeting and I think a great value. We'll feed you and water you. The hotel, not sure you can still get the $199 rate. If you can't, then I have some cheaper or alternatives that will be in the $199 range, although not as convenient. That was the advantage, I guess, of registering early, but I can probably get one or two more rooms. And this is really a platform independent. Clearly, I'll use a lot of HGSI. George uses a lot of Thinkorswim and FinViz. We'll be using EdgeRater. And really, it's about helping you learn the tools that you've already paid for rather than trying to sell you new tools. And if you've paid and haven't heard back a confirmation, then there's a problem. You need to reach out to me, hgsidoc@gmail.com. I always end up selling computers at that program. I have probably a 4 or 5 current version i7, SSD, 16 gigabyte, and high-def screens that are rotating out of service. And if anybody's interested in buying a great trading computer that's lightly used and still a current model, just give me a holler as well. All right, now let's go and do some fun stuff here. Make sure we're still recording. We're recording. And let's start by, let's look at EdgeRater. And I've already updated the data, but this, instead of just going through my spreadsheet, let me just show you some of the things I do. I hit Hindenburg Omen. I've got a list that I call the Hindi. The Hindi is all NYSE, and then the spiders, I probably need to update it. And what this is going to do is it's going to look at the characteristics that determine a Hindenburg. These are new highs and new lows, both greater than 2.2. McClellan turning negative, the moving average still positive on the NYSE. And then I believe the last part is there's a multiplier of how much the new highs can be more than the new lows or vice versa. So it's now completed, and so here we go, and let's just move this over here. So new highs greater than twice the new lows is the maximum, but they both have to be over 2.2, a rising moving average, and McClellan drop below zero. When all four of these hit, then we get a Hindenburg, and we look for a series of these, and you can see going back over a month, we've not had a Hindenburg omen. The next thing I usually look at is my buckets report. So the percent buckets are done on the S&P 1500. Let's just hit run. And what you'll see is a pie chart, and what this pie chart is telling me is within the S&P 1500, what percentage of the stocks are above the midline of their Bollinger Bands and what are below. And that's pretty much neutral. And then if you take one decile below the bottom and one decile above, and then the 10 deciles in between the bands, I look for aberrations. This is a pretty neutral looking picture all the way around. And I could step forward and show you what last week, I think it was on Monday, no, this was a date. Last week on Thursday, so this is 10 days ago, I came out and said, we're going to bounce. And the reason we're going to bounce is when you start to see this many of I'm thinking healthcare, of stocks trading below the lower band on the Bollinger Bands and the S&P 1500, when over nearly 35% are below the lower band, you know there's going to be a snapback within the next couple of days. And we clearly saw that, as you could see, as it moved down, and then ultimately we got to where we are. So neutral. Then I look at the market summary, and all I got to do is make sure that I've set my data provider to HGSI, and then I hit the green arrow, and it shows me some cool stuff. So what I have here are a number of major indexes, and I'm looking at percent B one-day change. So if you think about percent B one-day change is what percentage of the Bollinger Band did they move, and we know from the world of HGSI and the teachings of Ian that a 24% move within the Bollinger Bands is significant, and a 40% move is a stand up and notice. And what happens here, we are painting blue a one-day change. And you could see across the board, all except for the IUX, is that we saw a big move. Percent B tells me within that Bollinger Bands, where do I sit? And you could see that we were sitting at the bottom part of the Bollinger Bands in red, and we moved up towards the top. And then the Woody indicator is sort of a buy-sell indicator where it came off a sell and went to more neutral. Now, I'm not going to spend much more time in this today, except there's an amazing amount of power. So, for example, one thing I could do is look at the, go into, which one's power, I want to look for the power. Pro Tools. Let's look at group rotation, and let's look at my trading universe, which I put together all stocks $2 and 150,000. And what this is going to do is it's going to look at which stocks are making their moves. And this is a neat little tool that is just looking at a rate of change period of 22, ranking 5-day average. And I could adjust both of those numbers, but what it's going to give me is a nice list of the stocks that are moving up and moving down So it's really a neat, quick, and a pretty effective understanding of what's going on in the market. And you could pick any list that you want to look at. And what you see is, and of course, okay, it's going to populate it in a second. It's still thinking. Is it's going to fill up and show me the top ranked symbols, leaders top 10 up and top 10 down. It's going to show me biggest change to the upside or downside, looking for things that are moving. And then not only the biggest change in amount, but the fastest acceleration. So letting it run its thing. It's got to chug through here several thousand stocks, about 3,000. So it's doing its calculations, and this is a fast computer. So it's about to happen, I think, because it's not letting me change. Now, while that's doing that, let's just jump into TradeStation and take a look at, here it is. So this is showing me some of the stocks. These were the, of course, now TradeStation opens up there. Let me bring me back to Edge. So these are some of the stocks that are up at the top ranked. Builders First Source is one that I've looked at. Viggles had a nice move. Clean Energy, a steel company, iCloud. Here's some of the weakest stocks. No surprise, a 3D printer. Some of these have been big movers in the past. Here's the ones that had the biggest move to the upside. Pharma bouncing up. Yelp because of potential takeouts. Here's are some that are moving down quickly. If I owned any of these, I'd be wanting to get out of them. And these are some that are accelerating to the upside and some that are accelerating to the downside. So natural gas bull, 3 times going to the upside with a number of energy plays. So maybe we're going to see some energy movement this week. If I jump into TradeStation and I go into, all right, my, well, a couple things. One of the things I like to look at is my trading system. This is just a list. This is actually put out by John Person. I've added a few things to it, but it's a list of a lot of different sectors. I start with the major sector ETFs and could see the only thing that was down was the Treasury bonds. Of all the sector ETFs, whether you're looking at home, let's rank them by the biggest move. So UNG, there's a natural gas, was up 3.69. Biotech was up 221. XOP, so these are producers, I believe, was up nearly 2%. XLK Technology, by XLB, I believe home builders. So XLV Healthcare, you can start to go through and get an idea of where strength and weakness was. Home builders look strong. Materials strong. Energy, despite some weakness during the day, ended up okay. And I know Fang, which is a stock that I own and have owned for a long time, actually had traded down quite a bit at one point, as had Schlumberger, and they had a big rebound. Financials, strong across the board, both big banks and regional banks. Let's go up here. Insurers, broker-dealers, credit cards, industrials, technology. There's not a lot of weakness. Some of the semis were weak a little bit. Ambarella was down 2.2. Consumer staples, consumer discretionary. You can see why I'm telling you that there is not a lot of weakness this week. Some of the social media stocks were weak. So this was actually not this week, but Friday. So Friday was a super strong day across the board. So no surprise, we're going to see lots of buy signals. So let's look at the NASDAQ. Let me tell you what we're looking at. We're looking at 3 or 4 different signals on these charts. I'm looking at the color bars, recognizing that a red color bar is an Elder's Impulse, tells me that it's okay to short or hold. I shouldn't be buying this index or perhaps its stocks. A green color bar tells me it's okay to be long or hold, but I shouldn't be short this index. And blue tells me I can make whatever pick I want. I also look at these little red bars, or red circles rather, that are in the price bar, and those are Elder's MACD divergence scanner. So when those start to pop up, I know that I have some MACD divergence concerns. And then in the cyan and the magenta, I guess the red and the blue, these are person buy signals. And that's kind of what I look at in this chart. I've got daily, weekly, and monthly. I start on the NASDAQ, person buy, elder green, that's a buy. I see on the weekly that I did have some MACD divergence, but that perhaps came off. Here was the daily MACD divergence. So the dropping of the index this week took off some of the heat from the divergence. Now, it's also midline on the envelope, so it's got a ways to go. And if you look back, you usually don't see, although you did see last time a single bar, a single green bar, usually you see several of them line up. So one could hope that we get a couple days move up in this market before we get to the top and turn around. Quickly at the Dow. All right, something's eating up my internet speed. All right, I had a data glitch. All right, so here comes the Dow. Sorry about that. All right, here's the Dow, big green bar, person buy signal getting close to the top of the trading range, closed near the high of the day, high of the week. As you could see here, it's in a buy across the board, no divergences. I look at the S&P 100, the big stocks in the S&P, and don't know why my data is taking so long. Give it a couple seconds, and if it doesn't come up, I'm going to go do something else. But that's what I said last time. I could go through all these indexes. I probably will not, because they're going to show you all the exact or almost the same thing. And one would expect to see after the rebound on Thursday and Friday, green bars, person buy signals, some MACD divergence concerns on the S&P 100. The SOX. See how fast this comes up. Blue, blue, green, buy signal. S&P cash market. Green on a buy signal with MACD divergences. S&P futures, again, should look similar to the cash market. Green, buy signal, no MACD divergences. NQ100s, the NASDAQ 100 futures. Green on a buy signal. Russell futures. This a little weaker, but blue with a new person buy signal. And you could see there was MACD divergence leading to a drop. Now the Russell's a little bit more bothersome because the weekly is on a sell signal according to my elder indicator. So the Russell being, that must be the IUT, is the thing that is concerning. And then if I look at the IWM, a ETF representing the Russell, you can see it's turned blue, but still has a weekly red, but it is on a person buy signal. So the optimist would say it's got the biggest room to run. It's just a little bit behind the others. That's fine. Let's take a look in HGSI. So let's start by going into Woodward and Brown User Group, Major Markets Plus. And let's rank by T1, which is all technicals, price and volume, heavily weighted Friday, and then the week, and then 3 weeks, but Friday's the biggest contributor. You can see I've ranked by raw combo, and the Dow Jones, the NYSE, the NASDAQ are up at the top. On the bottom is the dollar, bonds, utilities, gold. So that's very optimistic for the market, but the small stocks being a little bit weaker are less optimistic. You can see volatility on Friday dropped about 15%. So volatility coming out of this market that perhaps is bullish, but we're getting to a level where reversals can be known to occur. If I look at a 5-day movement, silver and volatility were actually up 1%. Everything else was up less than 1% or down. Let's look at some of my favorites. And, I'm a big fan of trend lines. First, we'll look here, and I'm just going to show you, this is the kahuna. We saw that in Edge Radar on the market timing. Deep blue means it's a big kahuna. So now let's go to an easier view to look at, which is my 817. And this is a mess, but I think it's important that I show you that I've been looking at various trend lines. And so if I'm very bullish, I extend this. It's probably in the 2200 range. That's my upside target. Okay. Short term, I don't like this line. Let me redraw that line. Okay. Short term, that might be some resistance, and as you know, we're getting right up to this. And what's interesting, this is my short-term support. I think the 200-day would be my longer-term support. And you could see in this wedge that we are going up and down, and now the wedge is getting so close together. The other thing that was interesting is we failed here on Wednesday. Thursday closed on support, and Friday basically filled the entire range. My hope is that we break out, above the resistance, and then it'd be very bullish to see us retest and then take off and go up to the next resistance off of this trend line. So how do I look at this? One of my comments for tomorrow, we're in a trading range. At some point we're going to hit the top and come down. It would be nice to break above this shorter term one and see how far we can go. But for now, we're range bound. Eventually, we're going to break. Are we going to break down? Are we going to break out? That's the million-dollar question. And if you have a lot of money invested, it really is a million-dollar question. The Dow, it broke out. It's broken above. This was a triangle. It sort of broke down. Now it broke above it. But in reality, as I look at this, am I not looking at some type of a Darvas box? And, where do I set that top one? Did we break out of the trading range, or we still got to go up to this? I think probably both are true. And this will be my target here. But we're going to have to break above these things, and we'll come back into the range and run the risk of breaking down. Let's look at the NASDAQ. I know it's here somewhere. NASDAQ, broken record. This was resistance. It's now my support. We're in the midst of the trading range. We're halfway up. Like to see it take out the top of this. Let's look at the Russell 2000, the weak sister of the bunch. Came down to my support and bounced. And it was in a ascending wedge, and it fell out of that this week, which can't be very bullish. Came down to test what had been resistance, is now support, and bounced. It'd be interesting to see if it can get up through these moving averages. Certainly a lot of overhead supply, and the Russell being the one that's most questionable. If I look at the dollar sold off. We'll see if it's going to bounce from here. It was up a little bit on Thursday and Friday, but little being the key word. The VIX, as we mentioned earlier, just got hammered on Friday. Failed the 200 and got hammered on Friday. Now, despite the dollar struggling, if I look at gold and silver, not much going on in the gold land, and not much overall going on in silver. I know it's here. Oops, too far. You can see silver looks a little bit better, breaking above its moving averages, but still in a long-term downtrend. So Thoughts, range bound, looking for a break up, can't rule out a break down. Overhead resistance will hit us by probably Tuesday if we have a big day on Monday. It's very difficult to play short swings like this, which is why getting on the sidelines, protecting your positions, raising cash in smaller positions, not necessarily a bad thing to do until this market declares itself. Next thing I do is I go down to 07, which is industry groups. You see I have 175. 74 of them were moving on Friday. So that's a big move compared to a week ago. If I look over the 5-day period, it was 54. So when I see this number grow from 54 to 74, that means Friday was such a strong day that 2 more groups that had not been moving up over the 5-day period, or 20 more groups, actually moved up so much they got into the 2-day force. If I look at the 2-day force down, only groups that are down are IT services, don't know much about these companies, and computer hardware and storage. At least the index is down. The stocks, none of the stocks made the screen. If I look at 5-day down, we grow that up to 32, and oil gas services over 5 days have been down, although you could see minus 1.7 over 5 days, up 1.6 if one just looks at the last day, which means prior to that day they were down over 3%. Midstream oil and gas down, rail down, integrated oils down, utilities down, healthcare services down, marine shipping down. So a lot of things in the energy sector, among others, even exploration, production down over 5 days. But I care about what happened Friday. Let's go through the top couple, see if we can find something interesting to buy. Syngiva is a big takeover story where Alexion offered major, twice what the stock was trading at. They have a drug for a liposomal storage disorder, a hereditary disease that has massive pricing opportunity that is in its pipeline and could be approved this year. And that's what I think Alexion is shooting for, but I can't buy that now. It's way overextended. I doubt somebody's going to come in at such a big price and buy them out. Fate Therapeutics, never heard of them. Small stock, doesn't make money. Gapped up here, might go to FinViz. See what news was occurring. Loss. So it moved up on a collaboration between them and Juno, another young biotech. Elder Biopharmaceuticals doesn't make money. Minimal revenue. When I see a bump like that, I wonder if that's not royalties. Big move on Friday, and again, I might go to FinViz and notice it'll open up automatically in Elder. Earnings came out. Positive trial results in RA. A lot of these are crapshoots based upon data and presentation. Seagen has a marketed product for relapsed Hodgkin's disease. Broke out. All green up my technicals coming out of a squeeze with a Kahuna. Pocket pivots and Kahuna earlier in the week as well. That looks like it wants to move. I don't like its earnings. Sorrento. Uptrend, pullback. So far that I had some bingos, doesn't make any money. Looks like it wants to run again, getting over the 50 with the Kahuna. Repligen had a big move on Thursday, didn't do much on Friday. Was this earnings or a deal? So more info from the web. FinViz. All earnings. Array. So Bluebird Bio here, BLUE. This is kind of typical of what gets people excited. It based for a long time, but still at $50 a share. Had a gap up in December of 14 and hasn't looked back since. It's doubled since then, up to about 165. Doesn't make money. It's a preclinical company. It has a market cap of $5.5 billion. Obviously, lots of science risk. but also a potential takeover candidate for its pipeline. Here's one that I'm interested in, AMAG. Why do I like this? Well, it's certainly a lower left to an upper right. It's mostly green above. It's coming out of a mobile breakout from a squeeze with pocket pivots. But I like it because it's moving up off the moving averages, and look at the earnings per share growth. And this is a true box 7 turnaround stock where it's been having negative EPSs that turn positive. They've made some acquisitions and built a pipeline. Like this stock a lot, and I am long, and I'm long because of the fundamentals and a nice chart pattern. Probably a nice time to be taking an additional position. All right, excuse me. And I'll go down one group at a time looking for candidates. Cement, strange, but I looked at a lot of these today. CEMEX, C-E-M-E-X, CX ticker, in the penalty box down here where it's below the 200-day moving average. But you've got a squeeze forming here. The moving average is coming together. You had a kahuna turning bullish up there, earnings coming in, something perhaps to watch. Summit Materials is an IPO. U.S. Concrete, nice move here. Amazing, awesome earnings per share growth. Don't know how long they continue. Martin Marietta, gapping up here. Great earnings per share growth. Something's going on in cement. Pick the one you like and put your orders in and your stops. Managed care, I like Cigna here, but there are a number that made the list. And managed care is one of the big winners of Obamacare. If we see Obamacare rescinded, these things will probably get hurt, but I don't think you can rescind it without a better option. Triple S is a smaller one, so let's take a look at the ones that I like the most. HealthNet sold off, had a bingo, looks like it's moving in. It's at the 200, great earnings per share growth. I would put a buy stop in perhaps above the high of the day on Friday and not let this stock enter your portfolio until it takes out that high, because a fail at the 50-day moving average or an ISO failure is not a stock that you want to be buying. Centene has been a great leader. It failed. Hopefully it'll get above the 50 this week. Anthem had some weirdness last week where it had a big day, then a down day, negating most of the gain. Wednesday was negated by Thursday, inside day on Friday. Certainly a lower left, upper right, and relatively tight. And I also like Cigna, again, tight. But the game has changed, and Cigna's gone from a big growth stock to starting to pull back to support. Here you can buy a great stock off the 50. All you need is some momentum. I wouldn't buy it here, but I might take this and go into my TradeStation platform or whatever is your favorite platform, and maybe all right, it's locking up. Never mind. But I might put it into a chart, put some alerts around it, and then take the trade based upon those alerts. I'm going to actually dump my TradeStation because it's eating up lots of bandwidth, and it seems to have locked up. It's hard to believe, but this is a super powerful machine. It's got a brand new quad-core i7. It's got 32 gigabytes of memory. It's really a high-end machine, but it too, if you put too much stuff, it too gets tired. All right, so Cigna looks interesting with a pullback to the 50. But I might look for a PPS buy signal real time during the day. I might look for kahunas. I might put it in my watch list. There's a number of things I could do. And United Health Group, again, similar pattern, a little bit less attractive perhaps. Then Cigna needs to get up above its 50. So managed care, several potential buys. Automobiles, Tesla was all over the place this past week. with announcement of their super battery, also earnings. End of the week with the doji, sort of a spinning top. OBV is turned up, but in a sideways move. We'll need to see more to get interested. Honda gap up off the 50 with a mobile breakout, pocket pivot, and a kahuna. It doesn't make money. Doesn't look like a growth stock to me, and probably not one that I'd be following. Tobacco, it's all about the dividend and the safety. Here's Universal, UVV, going sideways, pays 4.3%. Here's Reynolds America, earnings power diminishing, but nice lower left, upper right, mobile breakup from a squeeze, pocket pivots and kahunas, pays a 3.5% dividend, modest growth, 11% year over year. Altria Group, MO, sold off earlier this year, going sideways right now. I think what's driving this group is a 4%, 3 to 4% dividend yield. As a cancer doctor, I have a hard time buying tobacco stocks. Medical devices look interesting. And you notice I'm just going through the top 10 based upon the two-day force. So what I liked about BEAT was its growing earnings per share growth. You could see the big percent year-over-year growth, much greater than the multiple. Pull back to the 50, and I would need to understand that one much better. Anything about LDR holding, doesn't make money, kind of a loose chart. ICU Medical, similar story, but it does make money, goes at a discount to its PE. Next one I'm looking at is steel producers. These have been up for a couple of weeks. John and I were looking at Ryerson. IPO in the market, really sold off hard. It does have money coming in, had a kahuna and a big day on Friday. I assume that this is earnings driven. This is a personality change for this stock. When I see a personality change like this, yeah, this is all earnings. When I see a personality change, I want to learn more. This might be something I might want to look at as a perhaps low risk play. United States Steel, Allegheny Technologies moving up above the 200, good earnings per share growth. So steel producers look good. We were looking also at AK Steel. Just pull that one up real quick. Talk about a Jesse Stein type junk off the bottom stock, but projected earnings in 94 cents in 2015. You could see earnings per share growth, not here yet, so this must be back half of the year earnings. Nice gradual move up here, but sold off some after sold off back here. Steady move. It hasn't sold off much. I'm sorry. I thought it sold off some on Friday. All right. Back up here. Next one is diversified banks. Let's look at Bank of America as an example. So Wells Fargo looked good as well. Here's BAC. And you could see BAC, which had sold off hard back here, has now broke its head above its 200-day moving average with a mobile breakout, all green above. Good earnings per share growth coming. This might be an opportunity to make a play of a good bank at a cheap price. And here's Wells Fargo. Better story in that it's in a nice uptrend, but you're buying it as it breaks out from a much higher level. Commercial and residential building equipment and systems. A.O. Smith, a leader here. Nice steady move up since October. Acuity Brands, similar looking chart pattern. Lennox International, this one's pulled back to the 50. I'd like to see some momentum coming in. So really what I do in HGSI is I go through the top 10, which is got ag chemicals. So these are some of the fertilizer stocks. Had a big move this week. I think there were some earnings that came out. But they're coming off of low numbers. AVD, American Vanguard, great earnings per share growth coming in, but massive PE. Not really growing its revenue. Not that exciting. You can see it's been in a big downtrend, but did break above its 200-day moving average. Here is Syngenta. I don't know if this is earnings or if this is takeover related. My guess is it's takeover related. Or both. Takeover. Monsanto looking at buying Syngenta. CF Industries, a fertilizer play. I think their earnings came out this past week. Kind of a saucer and a breakout. Pocket pivots. Everything is green. I just don't like the second quarter out. Their earnings per share bounce around. But this is one where I might go into MarketSmith and take a look at how it's trading in its long-term PE range. But this group is perked up as well. So I've gone through 10 longs. I've looked at the shorts. Other things that I would do is I would go into my warehouse view. I would go to all securities. And I would go into view. This is the Jeffrey Scott 150207 add-on that everybody has access to. And I go to a couple of my favorites. I look at the 5X volume and look and see if there's anything here that's interesting. This is, I guess, this year's plug. GEVO, it's a biofuel company that allegedly signed a deal with Alaska Air, and you could see, watch what volume did. 29 million shares on Friday. On Thursday, we have 40 million shares. On Wednesday, 438, 378. So this is a little known, not covered stock that had a news report and got everybody hot and bothered. And the stock went from $3 to $7 and started to sell off. These can be interesting. And this is the kind of thing where you might want to buy a cheap option and then see if it's like a lottery ticket. But boy, I wouldn't put a lot of money into this stock. These have a tendency of looking like this. Big run up to $12 on plug, and that was March of 2014. Now it's $2. I can't remember all these companies. Lakeland Industries, they run up. Now, if you're buying it down here, and it's the same story, no volume, 16,000 shares, 12,000, keep doing it, and then all of a sudden, 5 million. If you had seen this kahuna and a gap up and a Mobo breakout from a squeeze here, you would have made a ton of money. I wouldn't have seen it. 4 million shares, 2 million, 3, 9 million, 10 million. And this is when, here's 47 million. This is when all of us amateurs start getting involved. And then they all do the same thing. They crash and they burn. And there is a long list of stocks that do this. So I only bring this up because this puppy here is in the early stages and it might be interesting. But boy, just be careful and don't be the last one out when it peaks. Ceres, ag cheap stock. Intercloud, consumer discretionary commercial services, a cheap stock, gap up, must have been on earnings. Nothing really exciting here on the 5X volume. I like to look for pullbacks to the 50 with momentum. And that's my Kahuna Force up 2 and 150 above the 200 within 1% of the 50-day or free parking. So I'm looking for stocks that are in uptrends that pull back to a major moving average. It's kind of too loose. I would have skipped this. Big lots, loose. not so loose. So here's a stock that was intermediate looseness in an uptrend, corrected, forming perhaps the bottom of a cup, now in the right side of the cup, and it gapped up above the 50-day moving average on Friday with kahunas the last 2 days and pocket pivots. And I would probably put CME Group in on my watch list and look at potentially playing that this week. Next one is Carnival, Immunomedics. I'm looking for specific patterns, and really what I want to see, this isn't bad. Altria, we looked at this earlier, tobacco stock. Uptrend, pullback to the 50, and moving out with a kahuna and a pocket pivot and a Mobo breakout. Now, the ultimate ones don't break below the 50. So let's see if I can find one that looks better. Home Depot's not too bad up. It's within 1% of the 50 here. It did break below it, and it had a kahuna. I'm looking, these are some of the things I liked. LCIs, forget LCI right now. It's getting hammered. But this is a stock, you can see it's marked up. I play this stock a lot because it does the same thing over and over again. Moves up over the 50, pulls back to the 50. You buy it off the 50 and you get stopped out. You buy it off the 50, you get stopped out. You buy it off the 50. I've done this multiple times, and now the stock's rolled over. But I'm looking for stocks that are in this pattern here, in an uptrend, and pull back to the 50, because to me that's been a low-risk buy point. Or I look for my Boeing trade, or I call it my Boeing trade or Delta trade, because it's a trade I take before I get on an airplane and don't worry about it. And I'm looking for stocks that are going sideways, right below the PSAR dot, and they break out above the PSAR dot, and I want to be in. So here's Dealer Track. This is a messy chart. It's a sideways chart, and I probably wouldn't play this. However, it's squeezing. It had a mobile breakout on Friday. Everything went green, pocket pivot, and kahuna. So I know that this is a stock that is potentially setting up for a big move. Now, I could set a buy stop. Uh-oh. Here it is. Didn't know which monitor it was going to show up on. And I could say, gee, that PSAR dot is sitting here at 43. It closed at the high of the day at 42.91. High was 43. So in my mind, if the stock moves above that PSAR dot, I might be interested in going long. So as I look at this stock, I see that it's not optimal because it's already made a big move, but I could put a buy stop right above that PSAR dot, saying that this, sorry about that, I gotta remember how to do this. So if the stock breaks above here, then I want to go long. And I might put it closer to the PSAR dot. And then I got to figure out where I put my stop, and I might put my stop here. So I've got about $3.50 at risk, which is probably too much of a risk for me to take. But I know that I don't want to get filled unless it takes out the PSAR dot. If I get filled, I want to put in a stop, and I'd rather have a stop that's closer. I could have put a stop here at the 200-day, but that's too tight. But these are trades that I like to take when I'm getting on a plane, because I don't have to be there to manage. Here's a nice one. Moving up, next tier Energy Partners, a utility, right below the PSAR dot. I could set my stop below the 50, my buy stop right here, put my orders in, get on a plane. I got about a 5% risk. If the market moves up, I get filled. If not, I don't. And if I get filled, I put a stop in right away. CNO Financial, messy. Infoblocks, ooh, not bad. If it was trading well above the 200, I'd be happy. But here's a stock that's in a nice tight uptrend, shallow uptrend, on its 50. So it should be both a uptrend above the 200-day with a kahuna. So it met the last scan. And then this scan here, it's also got a squeeze, and it's right below PSAR. So this is a great one. And let's actually spend some time on this. So I'm going to put my buy stop in right above that red dot. The PSAR is at 24.37. My close was at 24.19. So I'm going to put my at 24.45. That's my buy stop. If I take out 24.45, wherever that actually is, I want to be long. Now, this is a pretty tight, this is an okay stop, and I'm going to go back and I'm going to look at these days. The low here was 24.19, excuse me, 23.26, 23.12, 22.78, 22.83. So I'm going to set my stop at about 22.78. So from 22.78 to 23.45, actually we do 24, whatever I said I was going to do, 24.37. It's about $1.60, so it's about 7 to 8% risk. And I would put in an order, a buy stop, that says if the stock trades above that green line, I want to be filled long. When I'm filled long, I want to immediately put in a order to sell at the red line. And I'm on an airplane. Market opens up big. Market's up 300 points. I'm going to get filled. I'm going to capture a big gain. And I'm going to get off the plane with a big smile. Stock opens up 200 points down. I'm not going to get filled. I'm not going to have any money at risk. Worst case scenario, stock fills and trades off the rest of the day, and I've limited my risk. That's why I love these trades, because I can make these trades when I have a real job. Come to my meeting in Florida. I'm going to teach you trades that you can take when you can't be at your computer all day long. Here's another one, uptrend, sideways. Kahuna on the 50, right below the PSR, mobile breakout from a squeeze. I like this one a ton. WSO, I want to put that in my buy watch. Now, I also can go into Think or Swim. Sometimes I can. I got to figure out what's going on here. Come on. Well, God only knows what's going on here. I must have killed my memory. All right. In Think or Swim, I could, you know what, it's worth me doing this. Let me, if you excuse me a couple seconds. Problem is, everything was on different monitors, and I'm sure that has not helped me here. And we are got a few minutes left before I wanted to finish. Now, everything that I'm doing tonight are the types of things that I'm going to cover during my meeting. And my hope is that, as Ian once taught me, my job is not to be a guru. My job is to help you learn to become your own guru. So hopefully you'll take some time, come to our meeting, and let George and I teach you how to use the tools that you've already bought or tools that are free, and how you can use those tools, figure out what kind of a trade you want to take, how to find them, how to make them, how to manage them. And I'm going to be adding some discussions about option trading and some of my favorite option trades, both from a leverage perspective for making premium and protecting some of my positions. So here, this is the problem. This chart, I think, uses way too much memory. But basically, during the day, I'm monitoring this chart, and it looks much better on a bigger monitor. I'm going to kill this chart because this chart just eats everything up. So one thing you could look at is spiders. You could see a buy signal from person. The diamonds in a buy signal. The Qs gapped up. We'll probably fire a buy signal on Monday. If I look at IWM, we know that's the weakest of the group. It's got to get above its pivot moving averages, or in this case, this is the 17 and 50 to give a buy signal. I've got a buy. If I look at the dollar, that's not what I want. Dollar has sold off. It's in a sell signal. These are person signals that are built into Thinkorswim. Gold is in a sell signal. It's not what I wanted to show you either. What I wanted to show you is this. Crapper. I really don't want to show you this account. There's too much personal stuff here. What the heck? I have a lot of trades, or a lot of money in this account. That's all you can see. It doesn't tell you anything else. I can go into all stocks. I guess when I had to reset, it let my personal stuff come back. My intent was to have done this. All right, all symbols intersect with, so I've got scans, and you'll learn how to do these scans. Let's look at PPS daily buys. So I can look for my PPS buy signal. So I'm running all stocks, $250,000 and $200,000. I'm looking for a PPS buy signal. And then let me customize and add a couple things here. I want my market. This is a institutional buy-sell indicator. I want to know the industry. I want to know the sector. All right, and now I'm going to scan the market and see if there are any PPS buy signals, and I want to show as many as 500. So looking at the entire universe, U.S. stocks, this is a way to perhaps find buy candidates. So I'm scanning the market, and so a couple of different things. Let me see if I can't scrunch this up a little bit. Everything here except for my institutional buy-sell are provided at no charge within Thinkorswim, including persons pivots. So what I've done here is I've sort of asked to see, are there any stocks that might have a buy signal? And more important, can I learn anything about the industry groups? So let's look at sectors. And I can see that I have nearly 500 stocks with buy signals. I've got energy, I've got my specialty chemicals that are strong, materials, industrials, lots of industrials, consumer discretionary, consumer staples, healthcare, lots of healthcare, lots and lots of financials. And you notice how many REITs, and then a few information technology, utilities, and telecommunications. So if I have an interest in any of those sectors, I could actually be coming in here and looking at those sectors that interest me. I could also, again, these are all stocks on a PPS buy. I could look at industry groups. Semiconductor equipment, electronics, communications, software. Again, lots of REITs. Insurance is strong. Banks, pharma. Biotech's been in a weak period of time. I see a lot of biotech with PPS buy signals. Now what I do is, because I got that institutional buying indicator, I can basically bring to the top those that also have institutional buying. And let's take a look at a couple of these. AAOI. And this is a stock that's on my buy list for this week. Here's a stock that meets several of the different things that I like. First thing, I have to have price and volume. So if I run my little pointer up here, well, I already know it's above 200 because of my scan. 251,000 average daily volume, not a lot of volume. And prices got to be above $2. Okay. It's in an uptrend certainly since January. It was in a squeeze here. It's broken above its moving averages. It had a kahuna off of the 50-day moving average on Friday, a mobile breakout. It broke through its PSAR dot on Friday. Actually, yep, I know that because it switched from a plus to a minus, and that would have been a buy signal. I like this because it's not extended, and so I could come in here and I could say I'm going to put a buy signal in here above probably the high of the day. So the high is 1540. So I might decide to put a buy signal in at 1545. And then I look back a couple days and I figure out that the 50 is now at 1363. So that's only 82 cents away. Well, it's $1.80, I think. I have to do my math. So I can look at 1363 there. And then the lowest bar is here, the low was 1340. So I'm going to put my stop, and it's probably a little wider than some people are comfortable with. I'll put my stop here. And so basically I have a stock that is not extended, that broke above its moving averages, that met a number of signals, and I know from Thinkorswim it has a PPS buy signal. And in fact, I could go and look at a VPA chart. And what do I see here? I see that it had a bongo on Friday, 0.4. We knew that. It was up 9%, closed at the top of the range. The force 2 and 13 are positive. Its volume was 226% above normal. Its VPA shows strength on high volume up bar closing on the high. It had a pocket pivot, a mobile breakout, and a daily bongo. What do I see there that I don't love? One thing I don't love is I don't need to have force there twice. So let me get my force. So I don't even plot these things anymore. I basically have them listed up top. And this blue arrow here is a person pivot buy signal. Okay? I can go down the list of my scan, come back, all right, okay. ABB, anything else that I want to look at here that I know I liked because it's on my other buy list. Here's that info blocks we talked about. Take a look at this over in the charting platform. High base, person pivot buy signal, and this is one that we looked at in HGSI, and I thought was an interesting looking chart as well. Remember I drew the prices on it? So it's further reinforced when I go into Thinkorswim and I see my PPS buy signal. And the other reason why it's reinforced is I told you this little 1 tells me there's institutional accumulation. CSIQ broke out on Friday as well. So let's say I want to see sell signals. I can do the same thing. And we'll teach you how to make all these scans if you don't know how to already. It's actually very simple. George is an expert. As you can see, or we'll see, there's probably not as many PPS sell signals as we're moving off the bottom. There's only 34. And the -1 tells me these are ones that are distributing. Their institutionals are selling off. And you might look down here and you don't want to be owning many of these stocks right now. And let's look at one. Let's look at Monster. It's expensive stock. It was down 10%. You have a PPS sell signal and institutional selling. If I go MNST and I come back here to my charts and I type it in, you could see a big PPS sell signal on a huge volume day. And I go back into HGSI, MNST. and you have a stock that missed on earnings and broke below its 50-day moving average, and might be one to look at to trade up to the 50, fail, and then short it at that point if the market is rolling over. So the purpose of this was not to make you jealous because of all the tools I have, because that's stupid and I have spent too much money. Everything I showed you, if you have HGSI, is in the program. If you take out that institutional buying indicator or selling indicator, everything else is part of Thinkorswim. All these labels are things that we will give you if you don't have them already. If you come to our meeting, they were put together by Bob Meager, ThinkScriptor Extraordinaire, the HGSI family. So all this stuff are things you can do, and there's a lot of power intraday in the scan. You can scan. Maybe I want to look at just one. Maybe I just want to look at energy. So I can look at what energy stocks have a buy signal. And since these are all energy, whenever the scan finishes, do 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 do. It's slow tonight. It's not usually this slow. I wonder if I'm not, maybe my wife is watching something on demand and chewing up internet stuff. The point I want to make is that you can make, there's many scans that you can do. And the nice thing about Thinkorswim is that this scanning thing works intraday. We'll come back to this. Let's go through some of the stocks that I thought were potential buy signals for this weekend, many of which we've already looked at today. And then I want to say goodnight. And get ready for what will be probably another crazy week. I'm going to go through these super fast. Koppers is a specialty chemical company. Chemicals were strong. It's been in a downtrend, had a green candle. So we had a breakout bar. This is a experimental high close doji that I'm working on in HGSI. A Kahuna, OBV is up, mobile breakout, all is green, great earnings per share growth, pays a dividend. Agios Pharma is another of these high-moving biotech companies. It's in a pullback, looks like a place to start nibbling again. Mobile breakout from a squeeze, and a Kahuna, high risk. Flammel, another healthcare company. If it can break above the 50, it had a mobile breakout squeeze, a Bible gap up, and a Kahuna on Friday. It's got earnings projected of $1.35 in 2015 after losing money in 2014, so that's a turnaround stock. AMAG, I already looked at. Ebix is a technology company, pullback to the 50. It had a mobile breakout and a Kahuna off the 50, which is one of my favorite patterns. Here's at AAOI, which we already looked at. Newlink Genetics, another not making money biotech, run up, pull back to the 50, and held, looking for some momentum coming in, does not make money. NCL, pull back to the 50, breakout with Kahunas 2 days in a row. Good EPS growth. IDTI, one of my favorite technology stocks right now. It had great earnings. You could see it's got earnings momentum coming into the stock, much more than the multiple. Broke above the 50. Dealer Track Holdings, we already, I don't think I talked about with you. Yeah, I did. It's not perfect. It's an ugly looking chart, but it did break above the 50. It's right below the PSAR dot. Had a Kahuna and a pocket pivot and a mobile breakout from a squeeze on Friday. HealthNet is one of the insurers sitting there as a potential pickoff. The 50, I'd like to see some momentum, maybe a Kahuna come in. Post Holdings, Cereal. How could this be exciting? It's exciting because I got a stock that was in an uptrend, pulled back to the 50, broke out above on Friday, mobile breakout squeeze, pocket pivots, and a Kahuna. Tower Semiconductor, I'd like to see it get above the 50. I'll be watching it. Here's a cement company we looked at. I think WNC makes trucks and trains, sort of a cup handle breakout here. We'll see if it goes anywhere. Good earnings per share growth, twice the multiple. Prestige Band Holdings, I guess they make a lot of over-the-counter drugs. Sold off hard, struggling to get above the 50. It did have a mobile breakout on Friday and a pocket pivot. I'd like to see it get above these moving averages. CME Group, one of the exchanges, uptrend, sideways, broke above the 50 with a Kahuna pocket pivot, one of my favorite signals. MEI, ditto, uptrend, pull back to the 50, waiting for perhaps some momentum, whether it's a PSAR reversal or a Kahuna. Did have a Mobo breakout from a squeeze. HA is an airline, got hammered on an earnings miss. It's on the right side of its cup right now. Perhaps the cup is over. This is the handle. Great earnings coming into the stock. I'm long that. NXPI, uptrend, sideways. Kahuna's off the 50. You see a trend here, I hope, which is upside, pull back to support, momentum. We looked at WSO a few minutes ago. Vulcan, upside, sideways, off with momentum. I bought into this past week. It's a cement company. Cigna, upside, sideways, momentum off the 50. I'd like to see a little bit of momentum to come in. Bank of America, I have it here more for the fact that I think it's going to go up, not that it's a great chart pattern. Rising rates will be good for banks. I don't think rates are rising yet, but it's getting further and further out from its issues with the Fed. Look at the earnings per share growth coming in. When they start to raise their dividend, the stock will go up. You want a stock that's an uptrending stock for a long period of time that's been sideways for 3 months, that looks like it wants to run. This is McKesson, big uptrend, sideways the last couple of months, broke above the 50 on Friday with a mobile breakout squeeze, pocket pivot and Kahuna. Be wary, earnings come out on Wednesday. Eagle Materials, another cement company, something's going on with cement. FMC, another specialty chemicals, breaking above the moving averages with momentum. Clovis Oncology, sort of a roll the dice play. They got a number of interesting products in their pipeline. You could buy it at a bit of a discount. Sold off with the biotech swoon. The big cancer meetings are coming up. It's all news driven. No revenue, loses a ton of money. Ligand is a company that basically owns royalties on a lot of products. Pull back to support at the 50 with a little bit of momentum might be interesting. Microchip, less on my list of excitement. It's really been sideways. I like the momentum coming in as it's going into the 50-day moving average. Tesoro Petroleum, not a lot of energy stocks on my list this week. Here's a refiner, pays a dividends, got great earnings per share growth. At a good buy point on the 50 with pocket pivots. Looks to me like a potential time to get interested. ABC, think McKesson, think Cardinal Health. They all do the same thing, which is be huge uptrends. Sideways over the last several months. Momentum coming in with a Kahuna and a pocket pivot. Cardinal, McKesson, ABC are fantastic companies. They're awesome operators. They have low margins but huge volume, and they make money when healthcare works. Obamacare increases the amount of healthcare volume. They collect tolls basically by being middlemen, and they're going to go higher unless Obama's overturned. Alkermes, I only put this here because I like the chart pulling back, and if I remember correctly, not only do I have a pullback to major support here, pocket pivot, a mobile breakout, I think, I don't know why this never worked. Who knows? I have a lot of issues with, maybe I got too many indicators with Thinkorswim. I had a person buy signal come in as well. Pocket pivots 5 and 10 day, Bongo daily. Didn't quite give me a Kahuna. Lots of volume. Forces are positive. I learned so much from this bar on my charts. Why clutter my charts? I can just read it up there. Ariad, pull back to support momentum coming in. And then lastly, Apple. Is this the week that Apple goes? I hope so, because I got some 128 calls that expire Friday. Earnings coming in. The news has come down about the watch. I think Apple's ready to run. We'll see. I mean, and I'm sure it's wishful thinking because I got some short-term calls, but it's in a sell signal right now, to be honest. Bum, 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 bum. Let's try one more. Look at energy cells. Yeah, I don't know why it's taken so long. I think I probably need to reboot. Anyways, I wanted to do a lot of stuff today. I think I got through. Let me go back to what I wanted to accomplish. I showed you my thoughts of the market. Range bound, coming off the bottom. Should see an up day on Monday, pending bad news. Some good stuff out of China, but we're going to run into resistance right away. We did the top-down review, looked at where the strength of the market in the leading sectors. I showed you how I used my TOS scanner this time. Didn't do much in seasonality. Looked at HGSI views. And just to finish on the smart groups, I showed you using all securities in the view feature. You can just go into the smart groups in the designer under my name, and you can find some of my favorites, 3 and 5x big volume, my breakouts from a squeeze, my pullbacks to the 50 with a kahuna. These are some of my favorite stocks. Notice the indices are here. So let's just look at spiders. Uptrend, sideways, within 1% of the 50, and kahunas came in. Maybe I should be more bullish. And then my PSAR is ready to break to the upside in a lot of the stocks we saw. Hope you all have a great week. And one more shameless plug. Nothing would make me happier than for this week to fill my last spots so I could stop talking about my meeting and get to preparing. I guarantee you'll have a great time. Breakfast 3 days, lunch 3 days, dinner Saturday and Sunday, screencasts of all podium presentations, HD video of all presentations, TOS indicators, everything I showed you today except for the institutional volume, provided at no charge, $1,000 per person, discounted hotel, $199 plus tax, if there's any rooms available. HGSIdoc@gmail.com. Email me if you have interest, and I can tell you what else you need to know. You all have a great night. Thanks, everybody. Goodbye.